Just getting started or feeling stuck? Wherever you're at, the VO Dojo is here to help you take your voiceover career all the way. Get the training, support, and connection you need to guide you every step of the way from I don't know to working pro. You get a rock-solid foundation and all the tools you need for your sustained, successful voiceover career. Mindset, skill set, and real-world experience, all in a hands-on, hearts-in, supportive community. Join us at thevodojo.com.
Oh, hello. Welcome, everybody. Welcome to the VO Dojo Get to Know VO series. I'm Tish Hicks. I'm the Master Sensei of the VO Dojo here in Burbank, California, and I'm joined by 𝗧𝗶𝗺, who will be moderating our event. And this is a free information webinar series that we do about getting to know an area of voiceover. So we have lots of different things that we do here. We thought it would be timely to talk about taxes, since it's about that time of year. And we're excited, super excited to welcome Katie Mercer, who is not necessarily a voiceover artist, but works with a lot of voiceover artists, so understands how our businesses work and what our businesses need in terms of taxes. And we were just talking, as we were waiting for everyone to come on, about how important and essential it is that we as voiceover artists also recognize ourselves as voiceover business owners from the very beginning. So we're going to go for about an hour. We'll take a little break in the middle. So glad you guys are here. And I am going to hand it over to Katie to introduce herself and guide us on this enlightening tax journey on a month or so before taxes are due. And thanks again for taking time during busy tax time to do this. So
Yeah, absolutely. Let me go ahead and share my screen for my slides. As we do in accounting, my life is basically slides all day, every day. Let me go ahead and start it up. Go full mode. Out of the way. There we go. All right. So my name is Katie. I've been doing my own thing kind of for about 6 years or so now. I've been in accounting for my whole career. I'm a CPA out in California. I've also worked a lot with a lot of people in a bunch of different states as well. Big in Texas, that's where I grew up. Gig at Maggie's. Uh, I went to Texas A&M for management, got my master's degree in accounting, got my CPA. Um, I've worked my career in Big Four accounting and worked in a lot of consulting roles. My most recent one was with 𝗧𝗶𝗺𝗀 doing something called accounting transformation, which is a really convoluted way of saying that I take data and make it look pretty. Did a lot of CFO advisory as well, which just basically making sure that they're doing like their most optimal strategies for using their money. So all that really boring stuff, that's what I do, and I find it fun, so you don't have to.
Yay, Katie.
That's me. So a couple of other little fun things about me. I have started 3 different LLCs and have successfully obtained business funding through an SBA-backed loan and have experience with litigation for breach of contract. So if you have any really crazy things come up, I know specifically with voice actors, you guys have a lot of contracts, and there's a lot of things in there that you don't expect to show up that you might end up breaching contract for. So if you have anything crazy like that pop up, I always am free to talk to. I always do I have a thing on my website. If you have just like a really quick question about something, I do not mind helping. You can always throw 30 minutes on my calendar and I can help you through stuff. If you want to throw some money my way, I will not deny it. But for the most part, I'm here to help if you have any questions. So I guess getting into the meat of everything, you're starting a business. You're a voiceover actor. You are doing something to make money, right? So what do you have to consider when you're doing a new business? And the first part is where do you start, right? So the first thing we're going to talk about is the legal structure. I'm sure you've heard about going LLC and doing an S-Corp. You've obviously need to get an EIN if you're going to go that route. What do you do with like credit cards and all of taxes, of course, is the big one that we're going to talk about. And there's a bunch of different kind of taxes you might not even realize that you need to pay. There's income, payroll, franchise. There's sales tax is another one that has been a recent one a lot of my clients have forgotten about. And then getting into the accounting side of stuff, if you're doing taxes by yourself, you might have seen on your Schedule C, there's a part where they ask about cash or accrual basis accounting, and you're like, what the heck is that? That makes no sense to me. I am scared. Don't be scared. I'm going to tell you what it means and what you should do. All right, so first thing, legal structure. What are we doing? If you start up a business, you're immediately a sole prop. No matter what, this is the first thing you're going to be whenever you start up a business. It just means, hey, I'm declaring that I'm going to do something as a business. It's really easy to set up because you literally just declare it. Like personally, you would do it on Schedule C, and it's just you keep track of it all on your own. There's no fees to maintain it. And again, it's taxed on a personal level, so you literally just add a Schedule C to whatever you're doing in your 1040. The disadvantages is that you do have heavy personal liability if you ever do go into a lawsuit situation. There's also less legitimacy for how good of a business you are if you ever want to get a loan or have any investors. I know that's not something you might be thinking about right now, but if you do eventually get to the point where you're doing like a S-Corp and you may want to do like a media type company where you're developing your own content, that is something you will have to consider at that point. You also have to pay self-employment taxes. There's no break on that, and it's a lot. And you also can't have any additional investors. You can't have anybody come in with you and actually, again, if you want to do like a media company, you can't have anybody in there with you. Next one is the LLC. I'm sure a lot of you have heard about this. It's really great because it reduces your liability in the event of somebody filing a lawsuit against you. The only assets that you have that can be taken from you at that point are what you've directly put into the company. So they can't take your car, they can't take your house, they can't take your clothes and your dog. The only thing they can take is what you've directly put into that business. So, I mean, they could probably take like like your studio. But at that point, you're at a lawsuit. Hopefully, you're going to mitigate a lot of this in the long run. There's also more legitimacy for investors. You have to go through the Secretary of State and register. It's a whole thing to get that going. So you're way more legitimate to people who actually would want to finance you. You can also extend a sole prop into a partnership way more easily. You can be a single member LLC, so you don't have to do anything crazy. So it would be the exact same filing requirements for the IRS as an LLC as a sole prop LLC, but you can easily add a partner if you need to. Again, it's also taxed as a personal income, same as a sole prop. So there's some extra things if you go partnership, but essentially you are also taxed even as a partnership on a personal level and not on like a corporate tax level.
Hold on
Some
one second.
disadvantages. Yeah,
Oh,
Jeff, go ahead.
actually, finish this thought, and then I'll uh, yeah, keep on going.
Yeah.
I'll talk in between the slides. Yeah.
Yeah, so disadvantages, you do have to pay fees to incorporate, and you have to file those articles of incorporation with your Secretary of State for your state. The yearly fees are based on your revenue and potentially yearly to remain in operation. In addition, you also must pay self-employment taxes. And I have another slide referencing some of the crazy stuff that goes on with like different states for that, and I'll talk about that a little later.
Good. Hold on. I just want to do a little check-in because I find for myself, I'm very good at making money when it comes to like the things about taking care of it and stuff like that. I can get a little like, what you talking about? So I just wanted to, this is all super good and super clear. I just want to check how people are doing. Like, because Katie knows her stuff clearly. Is the pace, are you guys, is everyone doing okay with the pace? Or do you have any questions? Okay, I don't want to assume, but I also wanted to create an opportunity that if anyone was feeling like this, like you can just go like
It's a
that.
lot of
So,
information, and I try to make it a little bit more digestible, but I know it's a big steak.
yeah. Okay. I'll go talk to my therapist and carry on.
Amazing. All right. Next up is S-Corp. This is a fantastic method to reduce your tax liability. It does have a lot of stipulations to be able to do it, though. Um, you are able to reduce your self-employment taxes, but you have to do what's paying yourself a reasonable wage. That reasonable wage, according to the IRS, is very vague. If you're going to go this route, I would highly recommend getting a CPA to help you determine that reasonable wage. There's some methods that I've heard. There's this like 60/40 rule that the IRS hasn't really given any guidance on, which is super frustrating for me. But there are some ways to document what that is to make it easier for you. But long story short, it's a little bit more complicated, but it does save you a lot of money if you're making a lot of money. This also gives a lot more legitimacy for investors because you're an actual corporation at this point. But it is just a tax designation. There's nothing really you need to do once you're an LLC to go the S Corp route. You fill out a form, you send it to the IRS, say I'm declaring myself an S Corp, and you're done. It's pretty easy, but you do have to have a lot more requirements once you do make that designation. So on the disadvantages side, you do have to be an LLC and file as an S corp on your taxes. So you can't do an S corp as a sole prop. You have to file with a state as an LLC and then make that designation. You also do have to file business taxes on a new form, which is the 1120S. It's a more complicated form. It takes a little bit more time, so you might want to hire someone to do that as well. So that's an additional cost if you're going to go the S corp route. You also have to create a board of directors and have meetings and document those meetings. So you're a real business at this point if you're pulling the S corp route, and it's very heavily scrutinized. So you need to make sure you're actually following some of the requirements for the S corp. Some states also don't fully recognize S corps. They treat them as a C corp, which is a complicated way of saying they're going to tax you on a corporate level and not your personal level. So the personal level is how you would put it on your normal taxes. C corps get taxed. I think the highest bracket is like 21%, and then it flows through. So there's a double taxation that can occur where you're taxed at the corporate level and then you're taxed again on your personal taxes. So check what state you're in. Make sure they actually do it appropriately for S corps before you do this. Again, probably ask somebody who knows it if you're looking, you can't figure it out. I personally think you can figure all this out yourself. 100%. This is not something that you require a CPA to do. It's just very helpful at this point, if you go S Corp, to probably get someone to help you set it up. And again, I want to say California's good. So if you are in California, that's a good one for S Corp, and Texas as well. I know those two specifically. You should be fine if you go S Corp to have it not be treated as a C Corp. All right, next up, do you have any other questions before I go forward?
uh, Evan, Evan has a question.
If you wanted to do something that was non-profit, what would be the ideal thing to list the nonprofit as for tax wise?
So there's a 501(c)(3) designation you can do with the IRS, and then you fill out, I believe the form is a 990. So every year you would just fill out a 990 form and send that to the IRS.
Okay.
It's not too complicated, but yeah, you have to fill out like a, a 501(c)(3) designation to the IRS, and there's a couple things on there that you have to fill in.
All right.
That's not too difficult. If you just type 501(c)(3) IRS, they'll pull up all the forms for you.
Okay. And you can have that while also having your LLC active, right?
Yeah, so what I would recommend on that front is you make two separate entities.
Right.
You'll have your nonprofit and then your for-profit. And there's a lot of really fun, cool things. I've actually worked with a, theater company where they had their nonprofit where it was like for specifically performing arts studios, and then the theater would get donated this money as part of like their operations. And so there's a couple things you can do there. It can sometimes shelter a little bit of the income depending on how you do it. And there's some fun tax stuff if you end up going that route. Let me know if you want to do some fun things like that, and I can help you show you how to do it. But
That'd be
yeah,
great.
definitely keep them as two separate entities.
There
Great.
are a couple of other hands raised. Is this a good place, Katie? Do you want to?
Yeah, go ahead.
Okay. Venus, hi.
Hi, Trish. Hi, Katie. Thanks for doing this, both of you. So my question is, if you have an LLC or if I have a sole proprietorship, if you go to LLC, do I have to pick S or C, or can I just stay LLC? Does it have to
Yeah,
have those either of those
you can just stay
designations?
as an LLC, as like a single like it's a sole prop LLC. It's just
Mm,
you and your LLC, and it gives you that protection. So I highly recommend it if you're in any state that doesn't have a yearly requirement. So Texas is a really great one. It's like I think they bumped it up to $400. When I did it, it was three, but it's a one-time $400, and then you have that protection forever. It's probably the cheapest insurance you can buy.
okay, because I'm
California
noticing
is not
some.
the one.
All right, I'm noticing sometimes with some of the clients there, if you're not an LLC with the either S or C, they don't recognize you as an LLC. So I'm wondering if it's valuable to even switch.
Um, I mean, I highly recommend getting an LLC. That's typically my recommendation to most people is go ahead and get your LLC. The only one I don't recommend that on is if you're in California specifically, because they charge you $800 minimum every year. And if you're not making a lot of money, $800 really, really hurts.
Okay,
And
great. Thank you so much.
yeah, and I typically recommend if you are in California to go S-Corp if you're going to go
I'm in
LLC.
Jersey. You know about Jersey? I'm in Jersey.
I got some in Jersey. I got some in Jersey. You
Mm,
should be fine. I'm not sure
okay.
I
about
just
the
moved out of Jersey because of that.
really.
Yeah.
You're no help, Evan. Thank you. Okay.
Let's see if we can get Joshua Quinn.
Hi there. I was curious, how does the board of directors meeting work if you're a single member LLC S Corp? You talk to
Uh,
yourself?
my recommendation on that is get some friends, and just put them on your board. And then what you can do is you can have a meeting with them, and you have to do it quarterly. So just have a quarterly meeting with your friends, get some food, and write it off. And maybe add your
Okay.
accountant to your board of directors.
Okay. I have my wife as an investor, like 10%. Would that count, or does it need to be more people than just two people?
Yeah, it can be two people. That's perfectly fine.
Okay, awesome. Thank you so much.
Yeah.
And Erin has one question.
Mhm.
Yeah, thank you for doing this. This is great.
Yeah.
In terms of, I'm in California, going from sole proprietorship to um, LLC to S-Corp, is that
Mhm.
dependent on revenue for the company from one's
You can
co
do it whenever. There's no like requirement for revenue for you to do it. I highly recommend not doing it though until it becomes financially feasible. If you're making, I believe the last time I ran the numbers, it was around 30K profit is whenever it becomes financially feasible in California to go S Corp with
Great
an LLC.
profit. Right.
I see. And I think you just mentioned that for people that are in California, it's better to do S-Corp than LLC.
Yeah, so if you're in California, if you're going to do LLC, don't do it until you can do an S Corp because you're going to have to pay that $800 fee every single year, no matter what. And
Okay.
that $800 is just so much. And if you're not profiting 30K at least every year, then the liability is so low. It's not worth it.
Okay. All right. Thank you very much.
Yeah.
Awesome. Great questions. Thank you. All right, carry on. So first we've set up our business in a structure, which we decide, and now
Now we're getting to the cash side of things. All right. So bank accounts and your EIN. A big question I get asked a lot is, do I need an EIN? You don't necessarily need one unless you're going to get a bank account specifically for your business. I usually recommend just going ahead and doing it because especially if you start as a sole prop and decide later on that you want to go to the LLC route, you will have to do this. It's a requirement as part of creating an LLC that you keep your personal and your business expenses separated. So I think it's a good idea to get in the good habit of keeping everything separate in the first place. So EINs are free. Don't pay anyone to do it, please. I beg you, do not pay someone to give you an EIN. It's on the IRS website. You just fill out a form really fast and they give you it immediately. It's basically a social security number for your business, and you can use it to create a business bank account with like anybody. I use Bluevine a lot. That's kind of my thing. If you want to make me some money, I have a partnership link with them. Please let me know. I'll send it to you. Uh, but LLCs do require you to have that separate account to maintain that limited liability. If you do mix your personal and business funds, it basically removes that status from you completely. And in court, they call that piercing the corporate veil. So if you don't want your personal assets to be affected, I highly recommend you keep everything absolutely separated.
Yeah, it's kind of like, think of it like keeping a kosher kitchen from the very beginning. This is my voiceover money, this is my personal money, and they don't touch. Like, yeah, really just creating the habit.
Yes, that honestly, the habit is what you really want to
Hmm.
get into
Yeah.
because it will bite you in the butt when you're done.
I can attest to it. Mistakes, yes.
All right, getting into credit and credit cards. So your business actually also has its own credit. If you don't know if you knew that, but that's why it's a good idea to go ahead and get an EIN too, because you can start building the credit for your business if you need to do any like crazy big expenses. Like if you really want to buy that really fancy microphone that costs you 5K, that's, I mean, sometimes you can't afford that outright and you need to be able to finance that. And having good credit with your business can
Mhm.
help you get good rates. You can also get a credit card. I actually personally recommend going ahead and grabbing a credit card and putting just your business expenses on that credit card so you can keep things separated. I'm really big on automation, so I have some programs that'll automatically pull everything in from my credit card to automatically assign categories. I do have some templates for that too, so if you work with me, I can give you some of my fun templates for that. But besides the point, I do recommend getting a credit card for that unless you are just really bad with money and you can't control yourself. I think the biggest thing there is make the choice that fits you. If you can't trust yourself with a credit card, don't trust yourself with a credit card. But I do use Chase Inc. That's the one I typically use. It's pretty easy. They give you 1.5 cash back, 750 new card membership the last time I looked. Um, Very good. There's a bunch of other ones that are also really good. I have a list of a few if you wanted to. I guess if anybody wants that, I do have a list of other like bank accounts that you can go to that I've tested personally that are pretty good. So bank accounts and credit cards, I can give you a list of ones that I have used, and I just did a bunch of research on it, so I can send you my PDF for it. The SBA is also a fantastic resource if you find yourself needing like a lot of money for doing something. So if you want to do a big project and make a movie, make a film, you need money for that. And the SBA is an absolutely wonderful, wonderful resource. There's great people who work there. I've worked with them for a very long time. I've actually gotten funding with them through a place called People Fund. Look them up. They're great. They're a nonprofit. They help out a lot of disadvantaged communities and things like that. But there are ways that you can do things. That's kind of one of the things that when I work with smaller businesses who really want to do like bigger projects, you don't realize what resources are out there to help you. There's so many resources to help you do like great things. And they want to. They want to help you. There's again, nonprofit. They want to get you to go and do great things. So, all right, any questions on that before we get into the nitty-gritty of taxes?
Oh, I think JD has a question.
Yeah.
Yes, I do. I've actually got a few businesses that are kind of dangling that I don't use, that I don't work anymore. How do I close them? How do I get the tax board off my back?
Oh, no. Well, as long as you don't owe any money on them, you should be okay. But there is a part on your if they're just like sole props, right? They're just sole props.
Those are sole props. I do have an LLC that's not going anywhere just yet.
Okay, so on the sole props, whenever you do your Schedule C, just put that it's the final one and that it closed. There's a spot on the Schedule C to say that it is closed. And then I believe there is a way with your EIN to cancel it. Let me write that down and send you the link to that so you can do that.
Thank you so much. Greatly
Absolutely.
appreciate that. I think there's like three businesses I gotta get rid of.
Yeah, just on your Schedule C, just put that it's the final one on there.
Fantastic. Thank you.
Yeah.
Cool. All right. And so we continue on the journey.
Into taxes, the meat of this. How to not get the IRS at your door, right? So obviously, I'm going to tell you to get a CPA because I am one. Uh, but you don't necessarily need one if you don't have a lot going on. I typically recommend once you've got like more than like 10K and 1099s, like you're just drowning in 1099s and don't know what to do with yourself, and you have a lot of recurring regular expenses, and it's getting overwhelming. Um, Typically, if you're overwhelmed, you go get help. That's kind of my key there. It's a lot easier when you're only doing maybe like four different projects at a time, and it's just a kind of a small thing. You're not making a lot of money. But when it comes to the point where you start owing money to the IRS, don't mess around. I have one client who's a really good friend of mine. He owes the IRS like 15 grand right now, and it's killing him. And I mean, he's not doesn't even make that much money, and it really does harm you in the future when that happens because you end up having to make a payment plan with the IRS, and they are not cheap on their penalties and they're not cheap on their interest rate. So if you're getting to the point where you're making money and you're owing money, get someone to help you. There are a lot of tax breaks you can get that you probably aren't aware of that a CPA will be aware of to help get you through it. And I'll talk about some of those too later on, so maybe you can do it yourself. But definitely when you start getting overwhelmed, grab somebody and don't wait. Get somebody. I was actually talking with Tish. A lot of things that I fix are people trying to do stuff themselves, like they grab H&R Block because I think that they're going to be able to help them, but they end up doing everything completely wrong, and then they get audited by the IRS, and then they have this huge tax bill and they don't know what to do. So my big thing is do things right the first time. Make sure you're getting things done correctly, and then making sure you're saving enough money to pay for your self-employment taxes up front. That way you don't have to deal with this in the future. So, also there's a bunch of, again, tax code changes yearly. So you might know something this year and next year is completely different. Like, thank you, Trump. There is the BBB that completely overhauled so many things. I don't think I mentioned this in here, but for you all to be aware of, you do not qualify for the tip deduction. None of you do. You do not qualify for it. The requirement on it is that you have to be a you can't be an SSTB. So this is service, trade, and business, and that does not qualify for the tip deduction. You do qualify under the designation that it's a normally tipped job. So if you do like Twitch, for instance, you get tips, but it does not qualify under the SSTB rule. And that's a very specific rule for you guys specifically. If an accountant tells you that you qualify for it, you do not qualify for it. So want to make sure y'all have that up front. That's one of the big tax changes that happened, and I've had to have this conversation with a lot of my clients to very unfortunately let you down. You cannot reduce it for your tips. Yeah. So there's that. In addition, some of the deductions that I typically tell my voice actors to do, if you build a booth, everything building out that booth is deductible. Deduct the whole thing. Did you have to like consult with somebody on how to build it? Did you have to buy plans? Did you like every single thing? Did you have to like drive out to some place to like inspect it? Like that's write-offable. That the mileage is write-offable. There's also a home office deduction. This is a big one that a lot of people forget about, especially if you live in a very high rent environment like Los Angeles. You can write off a big chunk of your rent, electricity bill, maintenance, everything you spend on your home as part of your home office deduction. And there's a form for that. I think it's 8829 that adds to your Schedule C. I'd have to double check that number. But it ends up being a significant amount of money that you can write off, especially if you have a smaller room. So like for me, I have a bedroom that is just my office. So that entire square footage of that bedroom, I get to write off as a percentage of all of my bills. So if, you're spending 10K on rent and 10% of your house is your office, 10% of 10K, you get to write off $1,000 on your taxes. And that's not even including any of your other utilities or anything. So it's a huge deduction. Highly recommend looking into it if you haven't been doing it. Other deductions, so like equipment and software. So if there's any software that you need to deduct it. Your microphone, deduct it. If you buy anything that you use for your business, you can deduct it. You just have to justify it. That's kind of the biggest thing. You have to be able to justify why you do a thing. One of the things you can't do, though, that a lot of people do try to bring up, you can't write off a gym membership no matter what. People have tried. They've argued with the IRS about it. They tell them no, doesn't matter. It doesn't matter if you have to have a certain physique. They argued that it's a health expense. And unfortunately, that also makes it even more difficult because it's not always classified as a health deduction either. You have to get a letter from your doctor saying that it is medically necessary for you to have a gym membership. And then that's also part of your itemized deduction, so you probably won't even be able to itemize it anyway. So very convoluted to do that. Make sure you're doing that right. There's also travel to record and like meeting with clients or like networking. Like anytime you drive to go and record in a studio, that's mileage you can write off. And it's a huge amount. Like I think it's like 72 cents for 2026. So every mile you drive is 72 cents. And it really does rack up over time. One of the other things I like to talk about and why I have Mr. Beast up here, if you give away money for channel content, um, he actually has to give all of the people a tax form for that money. It's not just free money that he's handing them. It's like if you won like the free car from Oprah. People have to pay taxes on that free car. So a lot of times people don't take the car, they just take the cash. So if you are giving more than $25 to somebody, you have to give they're required to report it. There's a limit for submitting 1099s, and it's $2,000, thankfully, going forward. But if you pay more than $25, technically they have to claim it. In addition, estimated taxes is a really big one that a lot of my clients just don't do. They forget about it, don't realize it's a thing. But once you hit $1,000 in tax liability, you are required to pay any estimated taxes quarterly to the IRS. I have a template for this as well. Based on how much money you've been making each quarter, it'll tell you exactly what to send to the IRS. And the big thing there is like you need to do a good faith estimate. That's how they look at it. It needs to be a good faith estimate. And it's eh, it's hard to calculate when you don't know how to calculate the taxes. And it's a very convoluted structure. And so a lot of people, I'll tell them, whenever you make money, take 15% and throw it in another account. Just don't touch it. 15% of every single penny you earn, just throw it in another account and never, never touch it. It'll end up being too much, but you will not owe it. It's better to give them too much than too little because they will come find you if you owe more than $1,000. And they'll give you a 1 year grace period if you do end up owing that more than $1,000 in tax liability. Because at that point, there's a requirement that you either pay what your tax liability was for the previous year, or you do that good faith estimate. Those are your two options. So again, you only get 1 year grace period. So if that ends up happening, I highly recommend asking somebody for help.
Mhm.
I
And
can stop here because I know that's a lot.
yeah, you mentioned self-employment tax. I think that's something that also is if you've come up as an employee or you come up as a gig person. I guess if you're a gig person, you're used to getting 1099s and used to paying self-employment. But if you're coming from being an employee, you may not realize that whatever you set your rates whatever you set your rates as your hourly or as your quote, you need to include that you will be paying your own taxes on that. Can you give us a little framework of, like you just said, if yourself, like you just said about the quarterly taxes 15%, but what's the framework of thinking about that, especially transferring from being an employee? Because when we're employee, we just don't see it,
Yeah.
right? Like, oh, okay, that was
So
taken out.
that actually
Yeah.
works on this next slide. This
Oh,
actually
okay, great.
explains that piece.
Oh, great,
So,
excellent.
so
I'm
it's
on it.
so it's considered a payroll tax. And if you ever worked a W-2 job, you'll see on there there's Social Security, Medicare, all of that is one line on there that you have to pay for. So how that actually comes out is you have to pay half and your employer pays half. So it's 7.65% of whatever you earn up to, I think the limit was like 120K. If you're making more than 120K, they stop it. But you pay half, your employer pays half. But if you are your employer, you have to pay that employer half, which then makes it that 15.3% that I have on the screen. And that's why I say throw 15% in. That way, like of everything you earn, that way you'll know you'll have enough. Because you will have expenses that will offset that amount, but you won't know exactly how much you need. And you won't know how much expenses you'll be able to offset. So that's just a safety number I usually give people if they don't want to do the math on it. I do, again, I have a template to calculate that for you if you don't want to give them too much money. But that's one of the big things that people do not realize is you have to pay that extra 7.65% on top of the one that you would have had to pay had it been a W-2 job. If you are running a partnership, you actually have to file Form 941 if you're and if you have any employees, that's one of the other big things, and you have to pay unemployment taxes. If you have employees, if you're just self-employed, you don't have to do this because you're going to pay it all on your 1040. But I put the information here in case like you get to a point where you do need that, and those are forms you have to fill out once you do get to that point. There are some softwares that will actually also help you with these forms as well. I believe WaveApps and QuickBooks will help you do it. I don't recommend QuickBooks because I hate it with a fiery passion, but it does do it. All right, we had a couple questions.
Well, yeah. Aaron.
Yeah, so really appreciate hearing about the kind of business deductions that VO artists can take. But I was wondering what's the stipulation in terms of income, revenue? Otherwise, it's judged by the IRS as a hobby. Can you talk about that a little bit?
Um, Yeah, so that's a very good question. So there's a hobby designation that can happen if you're not making any revenue. If the IRS realizes that you're not making any revenue and you're just doing a bunch of expenses to deduct, they're gonna be like, oh, well, this is a hobby and you can't deduct all of this from your income because you're not actually actively making any profit off of it. You don't ever actually have to make profit for the IRS to consider it a business. They look at your revenue numbers, right? So they're going to look at how much money you're making in comparison to your expenses. And as long as that kind of matches up to where it's like you're reasonably trying to do a business, you're good. There's not a limitation, so to speak, on that. I think the more revenue you do generate though, and that you report, the less likely they are going to question it,
So
right?
you're saying that it's conceivable to show a profit loss consecutively, yet the IRS will consider it a bona fide business, and therefore the artist can take those deductions. Is that correct?
Correct. The big thing, there is a spot on your Schedule C where it says what your actual sales and or revenue is. And as long as you're showing an amount there, you're good. Typically though, if it's they haven't really had like specific guidance on what a limit is on that. But if you're not making honestly like $1,000 at least, like they're
Hmm.
probably gonna say it's a hobby.
Okay,
And
thank you.
a lot of this is like a reasonable person. Would a reasonable person look at this and be like, "Hey, that's not a business. You're writing off 50 grand of expenses and only made $1,000.
Right.
A little iffy." So, yeah, I think a big part of that too is if you do get audited on it, you need to show what you've been doing to make money. And it needs to show exactly that you have been actively looking for work. So if you have I don't know. If you're really worried that they're going to come to you on this because you haven't been making a lot of money, I would definitely keep like records of like contacting different agencies that you've been in contact with and have that as like to show the hours that you have spent trying. Because they're not going to get you for not being profitable. They're not going to get you for a really bad year. They're going to get you if you're not trying.
Thank you very much.
Hmm.
Yeah. Joshua.
Hi again. Mine is a little bit of a particular question. So last year I had made more than I've ever made. and I was advised to look into the S-Corp. And so at the beginning of the year, I wanted a clean slate, and so I started the LLC S-Corp, incorporation process. But during that time, I booked some other jobs that were, decent paychecks. So how does the quarterly income work if I'm also paying as the self-employed self before the business started, and then the quarterly S-Corp taxes after that? Does that make sense?
Yeah, so are you doing it split to where it wasn't starting at the beginning of the year? Are you doing that
Well,
designation later?
I was curious, am I able to apply the income that I made while the business was being filed, or do I have to wait until the business was actually issued, the LLC?
Okay, so if you did everything correctly on the S Corp, then it's retroactive to the beginning of the year.
Okay, awesome.
Yeah.
Awesome.
Let's see. David has a question, and then but want to make sure we get through all your slides
Yes.
too. Yeah.
Hi, Katie. Thanks. Lots of great information. I'm about to build a home booth more properly. Very little income. A couple of questions about one about deductions. Can I deduct streaming services? Because I need to be hearing, I need to be listening to things that are booking. So I need to be on top of that. And as far as income side of the equation, can I pay myself into my business just to show a larger amount that actually is income so I can then deduct against it? Thanks.
All right. So on the streaming, I'm very conservative when it comes to these deductions, right? I want to give you the best way to make sure that they're not going to come back at you on this. There hasn't been any guidance referring to that specifically. The main rule around like streaming services, especially if it's for like research purposes, is they want proof that this was for research purposes and not for entertainment purposes. So there's two ways you can do this. If you want to use it for personal purposes, then you need to be able to divide it between your business use and your personal use, find that percentage, and that's a percent you can write off. That's technically the easiest, best way to do it. I don't like that at all, and my clients don't like it either. My recommendation, if you're ever going to do this, is you need to find a way to essentially create some sort of content out of it. I would highly recommend just having a blog where you post about the things that you watched on your streaming service and put in like your opinions and stuff about it because it's part of your industry. It is for research purposes, and then that'll be documentation that you actually did do research with this viewing of the content.
What about keeping notes as you're watching? Say, okay, watch the Allstate commercial, notice the voice was this or that, and just documenting that so the paperwork is there and, like almost like a diary. Would
That's
that work?
perfect. That's
Okay.
absolutely perfect.
All right. And thanks.
Probably good for your business practice. Like I like this. I like this idea that as we're building our skills and we're doing things, we have our voiceover practice, like our yoga practice, that we're building our skills, and then what you just said, David, is building our business practice. Like that exercise that you just said it does both. Like that builds your business practice. Like, okay, I am in the habit of documenting that I am researching for my business. And then it also gives you a journal of the things that you notice and how you have a process of keeping on trend as you're
Right.
building your skills. So that's really, really super smart.
Likewise, Tish and Katie, I do, pardon the expression, a shit ton of auditions, and perhaps taking a screenshot that it was submitted to my agency rather than just holding onto the audio files that shows shows the audition details and the fact that there's a file attached, rather than saying, "Well, yeah, I audition a lot," but having that proof just in case. Is that
Yeah, honestly, in my opinion, you should be having a spreadsheet of every single audition that you were putting out for. It's also really good to keep track of like whether or not you like made it to another round. And that way you can I'm a nerd with spreadsheets, so don't mind me here, but you can graph that and you can see over time how much better you're getting.
great? Great advice.
Cool. Awesome. Well, actually, Kelsey, is this a good time to take a picture and take a quick pause? Yeah, what do you think, Kels?
I was muted. I said yes.
Yes. Okay. Cool, cool, cool. Well, why don't we, because I know a lot of people have to leave at the tippy top of the hour, so why don't we take a photo as we're all here? Oh, 37 of us. Yay. Um, so let's see. I'm gonna unshare for a second, Katie, and then
Yeah.
what we'll do is just while everybody's here, make sure that we know how to keep in touch with Katie and what services are available and what's going on at the dojo, and then we will carry on and finish up all this fantastic information and continue on with questions. So, all right, we got 2 pages. So, what shall we say for number 1? We'll say tax free. And for page 2, page 2, we've got a lot of just words. Does anyone want to, if anyone wants to hop on, if you can?
3, 2, 1. Taxes.
There we go. All right. No worries. Kelsey is always um, what am I saying? I'm trying to take a picture. Kelsey is always lauding people who are so smart to come on these things while you're getting paid at work to listen to them. So, super smart. Cool. So, Kelsey, take it away for making sure that everyone knows how to keep in touch and what's going on with Katie and what's going on at the dojo.
Yes, I put Katie's info in the chat. So if you'd like to contact her, get her some CPA services, feel free. We also have Ask the Sensei coming up with 𝗶𝗺 𝗦𝘁. She's been in Dexter's Laboratory. She's been in The Grim Adventures of Billy and Mandy, Fire, oh my God, Fire Emblem. Yes.
That's right. Yeah. And she also does a lot of in-show narration. She's really, really fantastic. She's part of 𝗧𝗶𝗺 too. So,
Yeah,
yeah,
so we have her
she's super
coming up
cool.
for Ask the Sensei. And then we have some fight clubs coming up. I've lost my spreadsheet.
Well, Sean Gann from Crunchyroll is coming up next Tuesday, I believe, right?
Yes.
Mm-hmm. And Fight Club is our working pro workout that brings together top-notch talent with the decision makers who hire us. So,
Actually, I think he's coming up Monday.
oh, Monday, that's right, because we
Right.
usually do it Tuesday, but it is on
Mm-hmm.
Monday. Yeah, thank
Yeah.
you for that clarification. Yeah. Yeah, so if you're a working pro demo rep and booking, you can fill out the application to be on the Fight Club roster. And then if you are not that yet, everyone can be a spectator at these fight clubs. So those are great.
Yes, and we're also going to be at VOA, so
Oh, that's right.
which is another great tax write-off.
It is. Do it. And that's
Um,
actually a big one too. You can get per diem for going there. So there's a per diem deduction that you can do anytime you go traveling. And
Cool.
so instead of writing off your food, you actually give yourself a per diem deduction.
Oh,
So look
that's
into
super
that.
fun.
Highly
Super
recommend.
fun. Yeah, I'll be on a panel about mental health on Saturday, and on Friday I'm doing a breakout room called Dudes, Bitches, Motherfuckers, how to create the ultimate badass ABC. So if you want to put some tools in your toolbox, those are happening if you are going to be at VOA. So, and if you're just starting on your journey or want to refresh your journey, our You Should Do voiceover launchpad and workout is coming up in April, Mondays in April, starting the 13th. So, yeah, I think that's everything. Anything else, Kels?
nope, that's it.
Okay. That's what we're up to. And everybody, it's so great to see some, I love that people make this a destination. Like put this on your calendar. The third Wednesday of every month, we're doing something awesome here. Um, and the first Wednesday of the month is Ask the Sensei. So putting this on your calendar as something to either be here or listen to the replay as a podcast is a great thing. And if it's your first time here and want to get more information about what we're up to at the dojo and how you can be a part of what we're doing here, you can sign up for a voiceover or once over with one of our path guides, and we would love to talk with you and hear where you're at and where you'd like to be, because that's what we're here for, to help you get where you want to go. So that is the break. Now back to our regularly scheduled taxes.
Yes. All right. I'm going to try to blast through a lot of this because I really want to answer the questions that I'm seeing in the chat because they're really, really good. So bear with me on this. We're gonna power through it. Okay, so as I said, franchise corporate taxes, the big thing on these is that you're going to make sure if you're going to go the S-Corp route, you got that 1120 you're filling out. I have some charts on the right side here showing the difference between states. You really got to check your states on how much this is going to cost. Again, Texas, basically free every year once you've submitted it, unless you're making stupid amounts of money. California, they will find you if you're working in California. If you're making a certain amount of money in California, you are going to be required to actually file as an LLC in California, even if you're in another state. The requirements for that, I believe, have on the next page. Yeah, it is the exception to every single rule you will ever hear from anybody. If you exceed any of these thresholds on the right, you will be required to do it, and they've tried it with me. They've even tried it with me, and I actually met every threshold. But they will call you. They will send you a mail and be like, you need to verify that none of these things happened. So don't think you can get away with it if you are doing business in California and exceeding these thresholds. They will find you. Sales tax is another one. A lot of my clients don't realize is a thing until it's a thing. If you're selling any sort of like goods, so if you have any like stuffed animals for some of your really cute characters that you do, if you have any like signed stuff you're selling to people, that's going to be taxed. If you're doing this at like conventions, if you have anything you're selling at conventions, that has a sales tax tied to it. A lot of conventions are very good about making sure that they have you actually registered to do that correctly. Some of them are not. So make sure you're doing it, because if somehow California finds out that you didn't pay the sales tax for a convention, they will find you and it will hurt. So listed a couple things here. I will have these slides available for you at the end. So just so you are aware, they will be available, so you can look at it a little bit more in depth. So the SSTB thing that I was talking about earlier is a taxable service trade business. It can vary from state to state on what's classified as a taxable service trader business. On the right, I have some examples of what is considered taxable. The big thing on that is it just has to create something in some way tangible. I think that's the biggest thing. Like, general rule, if it creates a tangible thing, it can be taxed. So like photography, that creates a tangible work of art, that's taxable. So your voiceover stuff technically is not taxable because it is a service that you are providing that then they use to create a taxable product. It's like it's a piece of the product that goes into a product. A little bit convoluted, but just make sure that if you are selling any tangible thing, that you are actually collecting that sales tax. So on the accounting side, this is the complicated stuff. I'm gonna rush through this. I do have the slides again. So cash or accrual, this is basically your flow chart on whether or not you do cash or accrual. At the end of the day, the difference is that accrual accounting is what a lot of big corporations have to do because they meet certain requirements to have to follow what's called GAAP, and GAAP requires accrual, which basically means that you have to align your revenue with your expenses. You are all going to be on cash basis. Do not worry about it. You are on cash basis. Just hit cash. Uh, the big thing that you can do with cash basis is it allows you to delay your revenue and expedite your expenses so you can reduce your tax burden earlier. So If you are capable of doing it, you can ask someone to not pay you until January 1st, and you won't have to pay taxes on that income that you got until the following year, right? Because you didn't earn it in the previous year because it didn't hit your bank account. So that's one thing you can do. And you can also expedite expenses you would have spent in the next year, in the current year, so that you can deduct more if you need to. So there's some tax stuff you can kind of play with there to reduce your liability if you really, really need to. But that's all based on when the cash actually does transactions. Accrual is, you can't do it on accrual. And the reason you can't do it on accrual is because they don't want you to do that. So big picture, you're going to be doing cash. I've listed some softwares that I've used in the past and what I know a lot of people do use. A lot of people use QuickBooks. I hate it. I really, really recommend Wave apps. It's free for their basic one. If you want to connect to your bank accounts, it's pretty cheap. I think it's like $10, $12. Love it. I absolutely love it with a fiery passion. I highly recommend it. If you want to do something for free, Rocket Money is a budgeting app, and I highly recommend you could just use that, throw all of your business only accounts onto it, and it'll put it. The free version doesn't let you create categories, but I just put like kids is actually not kids, it's my utilities. You kind of can do that if you're not really big and you don't have a lot of stuff going on. And that just will at least pull everything and you can look at the end of the year to see what you actually spend and not have to do that hard work at the end of the year. I'm also working on my own software. So maybe one day that'll get done and I'll be able to roll that out. But eventually, whenever I do finish it, I will be giving it to my clients for free. So maybe one day you can get something for free from me.
Cool. And Wave also, you can do your invoicing through Wave, right?
Yes, yes. And that is free. The invoicing on there is free. They also have a payroll app in there as well. So if you're going S-Corp, you can actually hook it up to give yourself your W-2 through that.
Oh,
So
wow.
highly recommend. Love Wave. Don't use QuickBooks. Please don't use QuickBooks. It's funny, I actually had a nonprofit that I was helping, and the treasurer, her husband worked for QuickBooks, and so I had a very awkward conversation with her about why I don't like QuickBooks. So I hope none of you work for QuickBooks. I'm very sorry. Get a better software. So some other considerations I just kind of throw out, contractor versus employee is a big issue. A lot of times they will try to treat you as a contractor for tax purposes, but they're actually treating you as an employee with all the other requirements. So I have it up here. There's three requirements for it: behavioral, financial, and the type of relationship which qualifies you as an employee. And if you hit them, they are required to pay their half of self-employment taxes. Do not let them not pay their portion of self-employment tax. It is illegal. Don't let them do it. They can actually get in huge trouble if they do this. And I know there are some bigger studios, they do treat you like an employee, but they will try to treat you as a 1099 employee. So be aware of this. Don't let them do it. Again, 1099 payments, big picture here, it's now $2,000. So if you pay anybody $2,000, that's not a corporation, and that includes S-Corps. So any person you pay more than $2,000 to, you have to submit a 1099 form to the IRS every year. If you need help with that, I can help you with that. It's really cheap. Best practices, always keep receipts. It's a 3-year rule. Get all of your stuff on a cloud drive and store it. Digital is the best way to keep your stuff so you don't lose it. Check your budget monthly because fraudulent charges will pop up, especially if you're running a lot of transactions through on your business and you will not know and it will hurt you in the end. I've actually had to fix a lot of bigger client stuff where they did have fraud occur. It's not fun. Don't recommend. Claim all of your expenses, even if you think it's small. You can actually carry forward losses into the next 20 years, and it will offset any W-2 wages. So if you're losing a bunch of money now, even though it'll end up being zero on your tax return, keep deducting as much as you can because you will be able to deduct into the future with those losses. There's also deduction limitations. So there's a $25 gift limit that I talked about with Mr. Beast. There's some fringe benefit stuff. I have the publication link there. And again, per diem is a really big one. Please use per diem. It's really, really fun. You are not entitled to the hotel one. You are only entitled to the food one. By the way, do not do the hotel one. You have to direct right off the hotel. Yeah, and track your mileage, 72.5 cents for 2026. I highly recommend the app Everlance. It will automatically track every time you drive your car. and it'll put it in with a GPS, so you have all the documentation you need, and they literally will print out a PDF that you can give to the IRS. It is beautiful. It is free. Use it. I have some resources on here you can look at, and we're done.
Woo! Wow, that was like a refreshing ride. Like you make like not like going to the dentist, but you just made it go like, oh, that wasn't so bad. That's cool.
Yeah.
We can do this. Yeah.
You can. That's the thing. Like, it's not that hard. You absolutely can do this. I
Yeah.
believe in every single one of you.
It's good. All right. Well, it's just at the top of the hour, so if you do need to roll, thank you for being here. Come back next month. Next month is our demo listen derby. Come talk to us, etc. And there will be a recording, and Katie will be sharing the slides as well. Thank you for that. This is a beautiful resource. And if you have time to hang out, let's get to some of these fantastic questions. Do you want to gather the questions, Kels, that are in the chat?
Yeah, I've been keeping track.
Okay, great. Yeah.
I think I'm gonna have Adrienne come up.
Okay. Hi there. And thank you so much for this. I had a couple of questions. One, if you haven't worked in a year because of illness or whatever else, but you have previously and you are in this current year, are you still going to be penalized by the IRS and thought to have just a hobby?
No, they wouldn't do that route. I think the big piece on that is you have to be trying to get some sort of revenue. So if this year you got sick at like the beginning of the year and you weren't trying to find any work because you were sick for the entire year, you can't write anything off. So essentially what you would do is you just wouldn't claim your Schedule C at all because you were sick and weren't looking for work at that point. So
Okay.
it would unfortunately make it to where like you wouldn't be able to claim anything, or you would only be able to claim through the period that you were actively looking for work.
All right, Katie, one other question about that. So, for example, I am a participant in the Mystery to Mastery course with Tish. And so I'm really in school as far as I'm concerned. It's a learning process and we're upgrading our skills. Would that be deductible?
Oh yeah, absolutely. So the big thing on education is it's deductible for your current role only. So as long as it's education for what you're currently doing, you can deduct it. So like you can't deduct like a basket weaving course unless you're
Hmm.
like specifically going to use that basket weaving in like some content creation. So
Hmm.
that's the key.
Okay, and the last question, oops, it almost slipped my mind. Now, hold on one second. Moving. So if you had moving expenses, are you able to deduct those?
It has to specifically be you moved for the intent and purpose of the business requiring you to move. If it was not a requirement for you to move for the business, you can't deduct it.
Okay, thank you so much for this information. I appreciate it.
Yeah, you're welcome.
It's cool to hear everyone in business mode. Like, all right, here we go. Awesome. Who's next? Kelsey?
Let's get Patrick.
Hi, Katie. Thank you so much for doing this.
For sure.
I've I've got two quick questions. One, what states are you licensed in, or is that not a thing for a CPA?
So what's really great about the CPA is it has reciprocity in all the states. So I can practice anywhere. I've got clients in Florida, I've got clients in New Jersey, clients in Texas, got clients in California. I've got someone in Alaska. That's why I have that on there. So I can go anywhere that you need me.
And maybe Virginia, but I'm on QuickBooks. So my
I'm
question
so
is,
sorry.
it just makes it so easy to write over to TurboTax, pop it out, and send it.
Yeah,
I
they,
just
they
had
have
to,
a lot of integrations and I get it. It's an accounting thing. If you talk to like accountants hate it because when we have to go in there and fix things, it's not user friendly for us. That's
yeah.
fine.
I get that. I had to wait on two 1099s this year. That's the
Mhm.
only reason I have not already submitted. But and now I'm waiting on them to not charge me for TurboTax this year because it's included in my subscription. Anyways, that's a personal problem. But on 1099s, when when do we have to send 1099s out? Like if we hire a coach monthly and that comes to $2,000, do we have to, at the end of the year, send that coach a 1099?
Yes. So as long as it exceeds 2,000 for the year, and that's all inclusive. So it's not just one payment of 2,000. If you can do 1,000, and like once it hits that second 1,000 and it hits that 2,000 mark, now you're required. So,
Gotcha.
and the deadline for that is the end of January. So you need to have it submitted by the beginning of February.
Now, does
Oh,
that
well, I'll wait for them. I'll wait 7 years and see if they chase me down for previous years.
I mean, that's the thing too. They might not chase you down. I think they've been doing a lot better about like figuring out people who are not doing it correctly. But it's a little convoluted for them to figure it out. So you might be okay.
I mean, on the receiving end,
Hmm.
I've already calculated my numbers. These are the ones represented by W-2. These are the ones represented by 1099s. And here's the rest of my income, which are just one-offs. As long as that bottom number is going to be the same, like if those two 1099s show, I just put them here and subtract it from the rest of the profit. I'm still good. The
Yeah, at the
income's
end
still
of the day,
represented.
what the IRS does is they check all the 1099s they were sent, and if that number exceeds what you said was revenue, they know there's something wrong. So as long
Okay.
as you are saying that you made more money than what the 1099s they have confirming the money they have, they're probably not going to question it at all.
Okay. How about like I have a manager and
Mhm.
I pay the manager, the 225 a month. And at the same time, I'm also booking work through the manager and then they send me a 1099 at the end of the year. Are we just trading 1099s
Yeah.
or is that a relationship where they're just sending it to me?
Yeah, you're trading 1099s. So
Okay.
they're doing their management fee, that's your 1099 to them, and then the money they give you is a 1099. Which is interesting. Is that like on an agent relationship where they're actually entitled to like the income and then they parse it out to you?
They've got two sides of the house. Yeah.
Okay. Okay, then
Yeah.
yeah. Because
Okay.
usually it would either be like the agent is responsible for that and then they are the ones who give you the 1099, or it's going to be on the other side where the people that they're working with are supposed to personally send you the 1099. So as long as, and this is something you need to verify as well, that's not going to happen. I have seen it happen where you have the agent actually send you a 1099 for income and then the actual person who hired you also sends you a 1099. That's doubled. And so that's a
Yeah.
problem. So
Yeah.
you need to make sure that they're not double counting you on that.
Fortunately, that has not happened.
Yes.
Okay. Thank you
now,
for thank you for answering those.
when you're talking about coaching, does it matter what entity the coach is? Like if the coach is a business, would you send a 1099, or how would you determine that?
As long as they're not an S-Corp, that's kind of the big thing. So a corporation doesn't need a 1099. So either an
Okay.
S-Corp or like Walmart. You're not going to give Walmart a 1099 because you bought stuff from them, right?
Right. So you
So,
may be working with like for instance, I am an S Corp
mhm.
as both my voiceover and as the VO Dojo, two separate ones. So if you're part of the VO Dojo, you would not send a 1099
To be a dojo.
because
Yeah,
we're an S Corp. Okay,
correct.
cool. But something to talk with coaches that you might be working with because they might not be an S Corp and it might be something to consider. Okay,
Yes.
cool.
Yes.
So helpful. Yeah. Well, let's keep on with the really good questions, guys. Who's next, Kels?
Tyler White.
Hey, Tyler.
Hello, hello. Can you hear me?
Very like as if you were in a little hole under the house.
Oh, my bad. Let me
There you
think.
There
go.
we go.
I
Now
was
you're
doing
out in
some
the
shouting
open.
earlier. Um, where was I? Yeah, so I had two questions.
Mhm.
The first was a passing question, just wanting to know what Blue Vine was. You had
Oh
referenced
yeah,
it
it's just
briefly.
a business specific checking account that you can get. They have a lot of really cool stuff in there, like you can make like sub accounts. So I really recommend if you get it, you can make a sub account that'll automatically pull 15% every month out of your account and put it into
Solid.
that account. That way you don't even have to do it. You don't even have to think about it. It just goes straight there.
Solid. Very nice. I like that because back when I was an employee and was doing operation stuff, JustWorks would allow you to automatically deduct. So I don't know how to do
Yeah.
that on this end. And I haven't yet structured my VO business.
Mhm.
How far back can I establish a start date? I am in New York.
Hmm. So for so like have you I guess my question is are you when did you start making revenue?
Uh, the first money I ever made was in August of last year, but it was negligible.
Okay.
Yeah, so I was under 2000 for 2025. And fingers crossed I'll be, over 2000 by a lot by the end of this year. And I kind of want to make sure that I have all my ducks in a row.
Gotcha.
I'm
So if there's
preparing
anything
to
you
catch the
purchased
blessings.
during
Yeah.
like the hobby phase, if there's
Mm-hmm.
anything you purchased, I would definitely make sure you still have those receipts. There's something you can
Yeah.
do, which is called a startup cost. And basically you are giving your business all of the assets that you previously purchased as like the startup capital for your business starting. So
Okay.
you can take your personal assets and give it to the business and make that a deduction.
Got it.
And essentially
Uh,
what how that ends up working on the other side is typically if you were going to personally like sell something on like eBay to somebody else, you
mhm.
would have to take whatever you spent versus whatever you got from it. And if you got more than what you spent, you would have to claim that amount. And if you got less, then that's your deduction. But if you do it the correct way, you can just sell it to your business for whatever you char well, yeah, whatever you paid for when you initially did it, and then keep that receipt to show the proof that it's worth that much.
Got it.
Yeah.
I'm guessing depreciation doesn't count here, right?
So you would depreciate if you're doing so on a technicality, technically how you're supposed to do this is any startup costs you are supposed to, it's called amortize. It's basically the intangible version of depreciation. You're supposed to amortize those startup costs over, I believe it's a 15-year period, but they do have an exception up to a certain amount and you will not hit that limit because I really don't think you're spending millions of dollars on on your startup costs. But I think it's like 25K is like the limit that you can actually deduct up front. And that's one of their tax rules that you're allowed to do as a startup.
Got it. That's awesome. Then sorry now that I have branched off into two more questions.
Yeah.
The next question is in the similar vein. At what point do you think it financially serves us to go from hobby to, transitioning the startup costs and officially becoming a business? And apologies if I missed that when I came in a little late.
No, no, you're fine.
Mhm.
Honestly, once you're making money, that's my big thing. Are you making money? Are you going to keep making money? Do it.
Okay.
Right, right. That get your write-offs in.
Okay. Fair.
Because if you really wanted to, I don't know if you've done your taxes this year yet or not. Like you can do it for 2025. Since you made any money, you made money. Right? Write your stuff off. So like the moment you started doing anything for this business, like the very first time you ever reached out, the very first time you started recording a demo, like the idea popped in your head, that moment is whenever you started the business as a sole prop. So from that
Got it.
point forward, anything you did, you can write it off. And at that point forward, like you can write off your home office.
Would I have had to have an EIN in order to to declare this as
No,
sole proprietorship?
no, your
Okay.
social security is essentially your EIN as a sole prop. But you can do an EIN specifically so that you can have things separated. And I recommend that just to keep things separated.
Got it. Okay. And I'm guessing this is something that I could ask if I were to do that 30-minute session that
Yeah.
was dropped in the link, right?
Hmm.
Okay.
Yeah.
I don't. I feel like there was another question, but I didn't write it down fast enough. So
Go some time
thank
on my
you.
calendar.
Yeah, will do. Thank you so much. I really appreciate
Yeah.
it. Oh, wait. I got the other one.
Okay.
I guess this is probably gonna be the same answer. Because you mentioned content creation.
Yes.
And like I have a YouTube, but I haven't really put a lot of content on it yet. I'm guessing as soon as that gets monetized, that's when I would transfer that into a business, or would I be able to put that under the same arm as the voice acting stuff since I do
Yeah, you
some voice
can
acting
lump that
stuff
all
on it?
together as the same business, and
Hmm.
it's just all of your acting, like media. I have a couple people who just have like a media company in general, and like all of their media stuff. They've got like a Twitter, they got or
Hmm.
a Twitch. They've got their YouTube channel, and they got a TikTok. They have all the different things, their Instagram. They just throw it all into one lump thing. And then what you can do, and I recommend doing this if you've got a lot of stuff going on, you just have different revenue streams, right? So like Google has like all these different ways that they make money. They're not just a search engine. They have their search engine money, they have their ad revenue, they have Google Glass that they've been making, they have their AI stuff now. Those are all revenue streams, but it's all under the Alphabet Corporation. So you can do whatever you want in this business. It's just how liable are you? So
Got
a
it.
lot of companies will break it into a different business if they think that business is more risky, and they don't want the rest of their business to be affected by if that crashes. So like AI, for instance, is very, very risky. So it might be a good idea to make that its own separate entity, not affected all your other revenue.
Fair. Yeah. Okay.
Very cool.
Thank you.
Good
Really
question.
appreciate it,
Thank
Katie. You've
you.
given such
Yeah.
dense information in such a palatable way. So really appreciate it. Yeah.
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 Excellent. Who's next, Kels?
Evan, come on up.
Hi. So is there a way that you can deduct for any equipment that you've paid for your business before making the LLC?
Absolutely. It's the same thing I just said for your startup costs. It's the same exact concept. As long as you have that receipt to show the actual value of whatever equipment you purchased, you sell it to your business at that price. Done.
Okay.
Patrick
Yeah.
Hirschner, come on up.
Oh, I'm back.
He's back.
Yeah.
So you talked about the initial capital investment. This is an unfair question because I already know the answer. I just think it's useful for everyone that like I always make sure that that credit card is paid off every month. I never want to carry a balance. So sometimes that involves me making a personal loan to my company and tracking that. That's not income necessarily. That's a
That's an
additional capital
equity.
investment.
Yeah, that's what's called equity. You're putting equity into your business.
Yeah. Eventually I get to pay myself back, which after 9 years, I finally did last month for the first time.
Yeah, it's
Um,
essentially it's like a bank account. So like your business owns its own bank account. So whenever you give it money, it goes into the bank account. And when it makes money, it just accrues and then it can give you back out the money. You have to pay taxes on that income whether or not you take the money out.
yes. Yeah. So the real question here, buried, is do we have to amortize or can we expense? Say I buy a new laptop. Can I just expense that and not worry about depreciation?
I believe it's called a 179 deduction for equipment. And if it's under a certain amount, you are allowed to you're allowed to expense it out immediately. There is a maximum, it's in the millions for you, what you can do for that. So it probably will not become an issue, but the 179 deduction is what you will do for that. It's an extra form you have to throw onto your 1040 with your Schedule C tied to it. But there is a line, if you'll see on your Schedule C that says specifically 179 equipment. And you just have to list out what the equipment is and how much it costs, and then that gets deducted from your lifetime amount that you're allowed to deduct.
Oh, it's a lifetime amount. Great.
Yeah.
May I live to see that happen. All right. Thank you.
I have a question about Patrick, and receiving gifts. Patrick, you were like a unicorn winner last year, right? Because we got to work together. Did you
Oh
have?
my God. Are those supposed to be?
I don't know. That's what I don't want to how does that work? Because that was like, I know we got to work with each other as part of that. It's like a dump truck of goodness,
So,
right?
yeah. So that's an interesting thought. Would you, as the donor, expense? You know, I gave Patrick an hour of my time, and that was worth $250, and deduct that. But do I have to say on my end, I got $250 worth of time from Tish Hicks for an hour
Yeah, that's an
and count that
interesting
as
question,
income?
Katie. How does that
Or do we
work?
just ignore it and say we had a conversation?
Catch me
And
if
if it's
we can.
you can usually just ignore that. There's like some like barter rules that you have to do for certain things. Like if you give for like an exchange, like if I gave tax services in exchange for getting like art, you technically have to claim that on like barter rules. Uh, As an accountant and a CPA, I legally am required to tell you that you are required to report that. As a person, they will not know.
Yeah. And the only thing tangible that I received, like I didn't get I was a runner up, so I didn't get
Oh, okay.
the top prize. So I didn't get like the microphones and the headphones and all that stuff. I got we all got all the swag that nobody wanted to take home from the vendor room. Like, hey, here's a cool water bottle. Yeah, thanks. I don't have my luggage is full. I don't have any room for it.
Cool, cool. I was just thinking like, oh wow, that's really interesting. Yeah.
I mean, if you're a
That's
nonprofit, the things that you are giving as a nonprofit are not taxable because you're a nonprofit. That's one of the other things as well that kind of we can do fun tax stuff. The contributions that the nonprofit gives is not taxable.
What other questions do we have?
Joshua Quinn had a question.
Hi, I think you answered mine. I was curious why QuickBooks was so hated and why Wave is better, but I think you said it just makes it easier on your end. But if you have any elaborations, I'd love to hear.
Yeah, that's the big thing on the accounting side of stuff. If you need to move any transactions to like a different account, it just does it in such a non intuitive way. Wave actually has like a transactions log that shows you exactly the transaction, the amount, and the account, and you can literally click a drag down and change it immediately. And you can click like 10 different transactions and search for them and immediately change the category of like bulk transactions. In QuickBooks, it is a nightmare to bulk change transactions to a different category. And it literally there's templates that people have made to download information, change it, and re-upload it back into QuickBooks. And there's so many problems that can occur when you're trying to do that that it's awful. Disrespectfully to QuickBooks, it is awful.
Okay, Andy Parkin, you didn't get a chance to come up and ask your question. If you'd like to come up now.
Hey, Andy.
Hey guys. Yeah, my question was, well, I just filed my taxes for last year and I just went with the standard deduction because when I was looking at breaking everything down for what I could deduct, it wasn't anywhere near the standard deduction. Did I make a mistake by doing that? Should I have?
No, you're probably right. The standard deduction is going to be what majority of people are going to
Okay.
use. There are very limited situations where the itemized is going to make sense. Typically that's if you like had crazy medical bills. You were like you were almost dying and like in the hospital in the ER for an extended period of time and had like 30K in actual expenses that you had to pay.
Thankfully, no.
Then yeah, you might be able to do it at that point. Also in California is a really big one. They actually upped the limit on what's called salt tax deductions. That's state and local taxes. So part of your itemized are you can deduct all the taxes you pay to your state. So if you own a house in like California, you can actually deduct those property taxes, or like Texas, for example, they have property tax. But California also has an income tax. So you can deduct your huge property tax bill, you can deduct your income tax bill, and that often will exceed what the standard deduction is. So when that happens, then you can throw everything on there. And unfortunately, I hate that they did this. It used to be that there was a like $200 like on the top off the top that you could do for charitable deductions. So anybody, even if you're doing the standard deduction, could have that charitable deduction. They removed it. And so it's only part of your itemized now to do any charitable deductions, which is super frustrating and I hate it.
Hmm. Okay, well, I appreciate the clarification. Thanks.
Yeah.
Awesome. Do you have more questions, Kels?
Yes, David.
Hi again. It's funny, I can't remember the answer to your question about paying myself from one account into my business account just to show those numbers. And secondly, if I do take a standardized deduction and not go through the bother of itemizing, one should still keep, I'm just considering this a redundant question, one should still keep track of any kind of business expense for future up to 20 years that could go against that. Is that correct?
Yeah, so on the first question, so you're saying like you have two businesses and then one business pays the other business to show income?
Well, if I have money in the bank, so to speak, can I pay myself for voiceover work that I or for any kind of I don't know for some sort of expenses that I'd be or work that I'm doing for myself.
I mean, yeah. So at that point, you would have two different businesses, right? You'd have like the sole prop for your VO work, and then you'd have either another sole prop for whatever like entity you're doing the actual work for, or like
Mm,
make it an LLC. You would have to have two separate entities at that point. And you could have the
okay,
entity that's doing like the project would pay you, and then you would be able to deduct that income from that. So it would end up offsetting. So you end up not having to pay on any additional like technical income on that. So that is a good workaround to make it to where you're showing some revenue. But again, it would have to come from another entity that also is showing income,
I
right?
see. Okay,
So,
and that can't be my retirement income, so to speak.
well, in what sense? What are we looking at here? What are we trying to?
It just sounds like I'm making more complication than simplification.
No, 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 no. Let me hear what you're going for on this. Can we make this work?
Well, if I'm getting a check every month from my former employer and I'm paying into, well, I guess that would be considered education expenses or startup expenses rather than any sort of a wage or a gratuity, so to speak. Is that correct?
Okay, so entity A, they're paying you, old employer. You're trying to make it to where that income is paying you as a VO, right? You're
Right.
not doing actually any work for this entity, correct?
Correct.
So this is what you want to do. You're going to have two different entities. You're going to have this entity, which you are going to give equity to. So this money, you're going to give that money to this business, and they're the business that's going to do projects. Okay. And then whenever you do VO work for this business, that business will pay you for that VO work. And that will show on your sole prop that you got income. And that income can then be deducted from. This company down here that's actually doing the projects is where all that revenue would go when you finish the project. So
Okay.
you would be able to deduct things for this, and you can show that you're doing the project at this point. And you can probably last a couple years not making any revenue on it if you show that you're actually producing a product that will eventually generate income. And then this can be deducted for all your actual VO work. If that makes sense.
A little bit.
If you want, you can get on a call with me and I can actually flowchart that for you so that
Okay.
you can see
Thanks.
how the money goes. So
Much appreciated. Thanks.
yeah.
Yeah, those are the places where I go,
It gets to
That's where
be
my brain just is like, oh no, we can do this.
it gets to
this
be
is
blah
why
blah blah
this
ginger,
is why
blah
we
blah
find
blah,
each other, right?
blah
Like, oh
blah
no,
blah
I got this. We
ginger,
got
blah blah
this.
blah ginger.
Good, good, good. What are the questions, Kels?
David has a question.
Other David.
Is there another David?
Mala.
Cool. Is he still here?
Yeah,
Yeah. Ooh,
yeah,
listen to that. Yes, he is. Hello.
yeah. So I was just,
It's like, oh
I
yeah,
was
we
just,
are talking to voice actors.
yeah. No, so I just was wondering, can any subscriptions to like a pay-to-play platform be considered a deductible?
Yeah,
Uh,
absolutely.
okay, cool. All right, thank you.
Yeah, for sure.
Why don't you take the lead, Kels? Because
Yeah.
if I'm flawed here, I don't want to take it.
Should they shoot you an email to set up a consultation or go to your website?
Yeah, I've got a website scheduler on there. It's the contact us part. So just pick a time on my calendar. I would highly, 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 highly appreciate if you would do it after April 15th. I am very busy at the moment. Unless you would like me to do your taxes for this year, please do it after April 15th.
Mhm. Do you have time and space to take on new clients?
Yeah, I'm currently tearing through all my clients right now for personal taxes. So right now is the time to get in.
Cool. That's great to know. That's really good. That's really good. Cool. Is that all the questions, Kels?
Yes, from what I can see.
Sorry, I
Shoo!
have one more, if
Oh
you
yeah.
don't mind.
Yeah, go ahead.
What are your rates?
So it depends on how difficult you are. That also includes your personality. Just
Mhm.
kidding.
Fair.
Typically my rates are it's around 300-ish for your personal taxes, and then there's like a $50 throw-in for the Schedule C, and then if you have state, it's another 100. I also charge a one-time setup fee for small businesses. I believe it's somewhere around like $300 for the first time client, and that goes away for every subsequent year because I give you a lot of resources whenever I do bring you on as a client. And I would love, like, sometimes people just want those resources, and that's perfectly fine. You can do all this on your own. A lot of the times, whenever I've given you everything to set you up on the right path, and I want you to do that. So I do have that initial setup fee that I do for my clients so they can just take it and run if they want to. But after that, if you want me on for the subsequent years, that does not. I take that fee off.
Got it, got it. If someone wanted to get a setup consultation, is that something that you would be willing to do without bringing them on as a client, or is it
Oh
only for
yeah,
the clients?
absolutely.
Okay.
Absolutely.
And how much would that be?
I would probably just do that at an hourly rate. I'm about like
Got it.
75 an hour. So however long it takes, we sit there and we get it done.
Sounds good. Thank you so much.
For sure.
I have one more question, Katie. What about city taxes? I know in LA that's something, and
Yeah,
I
specifically Los Angeles has you have to register with the city of Los Angeles if you're doing a business. Uh it's a kind of a weird thing. I don't think many other cities have this, but if you are specifically in Los Angeles, they have a requirement for you to register your business. You don't have to pay anything if you're not making more than I think like 100K in profit, but they still require you to submit it. That's the only one I know of locally that requires you to do that.
so
Wow.
like Burbank wouldn't.
I don't think Burbank does. I know Los Angeles specifically does. I don't think Burbank does. I would check that though.
Okay. It's good to know. How long have I been in business? Okay. Yeah.
Right?
All right, guys. Well, thank you, Katie. Thank you, Kelsey, for bringing Katie to us. And thank you all for being here with us. This is kind of this is what the dojo is about in terms of, there's things that are part of this business, both developing your skills and building your business, that are kind of mysterious. And then really all it takes is taking a little bit of time, finding someone who knows answers and is really good at explaining them, laying it out so that you have a new framework of thinking. I think this in this short amount of time, Katie, you've created a framework of thinking. There's an entity, there's a this, there's a this, there's a this. So these are the things we have to take care of because it gets all blended in. Like, I gotta do what in a form and Okay, maybe other people don't have such trauma around this, but maybe it's not as hard for other people. I hope so. But the way that you laid it out is that's what we're about here. So thank you for being a part. I'm super excited for everyone to know you as a resource. I love that you're so uh, artist business friendly because I think sometimes people are like, what is it with you? What is it with y'all? But like,
Accountants are a very particular personality.
yeah, yeah. So
Uh,
that you're
I
so joyously welcoming and going like, yeah, let's do it. Mhm.
Yeah, I again, like I've worked with creatives pretty much my whole life, and it's my vibe. I vibe with it a lot better than the stuffy. I mean, I worked financial due diligence with like private equity firms. It's a very different ride. It is not a fun ride. It is a very boring
Good,
ride.
good, good. Well, thank you for bringing your clarity and your joy in this part of the work so we can find ours. Or have you enjoy doing our taxes for us. That's great.
Absolutely.
Yeah. All right, everybody. Thank you so, so much. Look forward to, if you're new here, look forward to talking with you. If you come here all the time, look forward to talking with you. Come play. We are here for and with you, with and for you. And we'll see you all in the next time. Thanks so much.